you're synthesizing everything you know, and you just kind of pull it together and you say, well, based on this and that, yeah, that's probably about what I should expect there. That's the majority of trading. Granted, that's where the art comes in. That's where it's a challenge, and that's why we have to practice it. But there's another little picture there of a little small reversal. I got some more coming up here in a minute. Let me give you some more information about trading the reversals. You're going to notice that the reversal is really just a way of identifying the double top and the double bottom chart patterns. And of course, we call them M and W patterns because, well, the truth of the matter is there's a guy that named them M and W patterns, but they look like M's for murder, or W for double top, or W for winner, M for murder. The M is a double top, the W is a double bottom. And if you look at a guy whose last name is Merrill, if you look at the Merrill patterns, there's all sorts of variations. Should you go study them? Probably not. It's going to be a waste of your time. But Merrill patterns, they've got, I think there's 16 classifications and variations of the double tops and bottoms and the M and the W patterns. They all tell you the same thing. And every one of them is going to tell you that you trade them on a double top at the break of the neckline, and on the double bottom, you buy in at the break of the neckline. Every one of them is going to tell you the exact same thing. That's the way you trade it. So you don't have to go out and find out all this exhaustive research on a subject when I can just deduce it down to you. I gave you the Cliff Notes version. That's all you need to pass the test. And the test in this case is real life practice. So we're going to trade it the exact same way. And then once we see that breakout, then we just obviously go with it. Now, if you see the stock pulling away from the band, you want to tighten your stop or exit your trades, depending on the way that you see it pulling away. So let's come over here and look at some examples, and I'll go through several here. Let's start in this trend trade right here. For example, we're pulling away from the band here. In this case, I would tighten my stop because obviously we're in a nice trending trade. We're trading back down to the bands, but this could continue. Okay, in a case like this one right here, I would have put a stop under the 20 period and probably stopped out. So we probably got out of the trade, but there's a good chance we got back in on this breakout up here. And then when it starts to pull away, this is the challenge. The initial one, I would have tightened my stops because it just looked like the trend was continuing. But watch what happened here. The first one exceeded the band. The second one did not even make it to the band. In this case, we had a third one that did not make it to the band. So we've actually got a small triple top here. It's forming the top. The band continues higher. And anytime you see that picture, anytime you see a stock trading up towards the upper band keeps going higher, but the stock doesn't make it, that's a sign of weakness. That's the way that the Bollinger Bands show you that the momentum is slowing. From a chart pattern standpoint, it's a triple top. But from a Bollinger Band standpoint, it's what we call a reversal. It's creating a little resistance here. It's obviously slowing momentum. There's a good chance that there's either a reversal or at the very least a change in trend. And according to this picture here, you can see what happened. We traded up. This is the S&P, by the way. We traded up from about 1250 to 1400, and we've been going sideways ever since then. Well, I say ever since then, but according to this picture, ever since then. Okay, does that make sense? Now let's take a look over here at not an index, but at a stock. This is on Sears, and I got several examples on this trade, both bullish and bearish. Watch what happens here. We were trading the trend. We got a great little pennant pattern, broke down. We're in a nice Bollinger trend trade. We hit the bottom, and then we bounced to the 20 period, which is practical. That's logical. On the second attempt, we did not make it back to the band. That is your big old warning sign. You're like, oh no, I didn't make it back to the band. When you see that, there's a good chance. I mean, it would have been logical to trade the pennant and think for a bearish trade. It would have been logical to add to your position in a bearish trade up here as we're rolling down. But as soon as you see this starting to create a support, pulling away from the band, not making it to the band, that's the signal that says, oh, this trade is too dangerous. You either need to tighten your stops really tight. And when I say really tight, I mean like right in here. You would have been stopped out within a day or so. Either tighten your stops really tight or just take your money because that could very well become a capital preservation issue. Now, notice this one up here. We traded all the way up into the bands here, and then we started pulling away. Never even had a second attempt. This one just rolled right over. This one's a little bit less common. It's more of a V-top, actually. It's not exactly a V-top, but it's more like a V-top. Most of the time, stocks take time to create a topping pattern. You know, that's why we have double tops. That's why we have triple tops, because stocks take time to do the patterns. In this case, we didn't. This one just rolled right over. We got a tweezer top, and boom, we started to reverse. Those things happen. Tweezer top at the top of your Bollinger Band, it starts to pull away from the band. I would have suggested tightening stops in here. And as the trade kept going sideways, about a week later, you're thinking, oh, Shuki, is this thing going to go over or not? You actually had some bullish optimism. You had the bullish, the lower candlestick here suggesting the bullishness might come back in. But eventually when it broke bearish here, you just have to get out, maybe cut a loss, depends on where you got into the trade. And then watch what happened. The trade reversed. We actually got a little breakaway gap here. Come back, come back. Here we go. Actually got a little breakaway gap right there. Traded down. Stock starts to pull away. This gives you cause for, what do I do? But watch what happened. When the stock got close to the 20 period, it continued bearish right back into the band, and it continued. So you knew, once it hits the band again, you know that there's still a lot of strength in there. And either way, it's still a pretty good probability if you can enter this trade on that new bearish gap down, which happened right here. If you can enter the trade there, it's still good probability that you're not going to lose your shirt on it. It's pretty good probability trade. And then, of course, as we traded on down here, we got a stair-step pattern, big bearish gap down outside of the bands. But watch this. The next attempt, we started trying to go on down. We did not make it to the band. The band continued bearish. The stock said nope. And once we start heading the opposite direction without touching the Bollinger Band, that's a big warning that says, hey, get the heck out of here. Now, watch what happens as the trade continues. This is a good little setup here. Oftentimes we see these. It's not really a squeeze per se. It's kind of a squeeze, but we still have the effect of the squeeze. The bands aren't really tight, but they still come together, giving you kind of the squeeze setup. Got into a nice little trade. We're walking the band up here, very much pushing right outside the band, right up into the band. Uh-oh. Now, see, there was no real warning of reversal here other than the fact that our bands kept going higher, and we got a topping pattern. And as this thing started to roll over, we were far, far from that upper band. Then you start looking left and you say, I'm not that far from my last resistance. I just barely poked above that. And then, of course, what happens? We get into a bearish trade. We're pushing into the band. Look at that. Not getting back down to the lower band, even though the stock continues to trade lower. The band is going faster. Anytime the band is outrunning the stock, if the stock starts to slow, it's a signal of strong weakness or intense weakness. All right. So does this make sense? You guys comprehending this? Let me give you some settings here for the Bollinger Bands. I think you're going to like it. Moving averages. The moving average portion is going to be a 20-period simple moving average. Yes, you can use an exponential, but the bands themselves, the formula for the band is built around a simple period. So logic would have it that if we're looking at a simple period built into the band, that it would make more sense for that middle line to be a simple period moving average. So the simple average is the one we use for the moving average portion. The upper band, we have the band average of 20, standard deviation of 2. And most of your charting softwares are probably going to have this as the default, but not all of them. I've seen there's a lot of variations of settings that you could use. So, I'm going to give you my settings, 20 and 2 basically. Lower band, the band average is 20, standard deviation of 2. Now, people often ask for alternate settings, and, the truth is I don't really have a whole lot. I mean, I have some that I can throw at you, but I don't think it's worth your time, to be honest. So what I would suggest is you take these settings, take the 20 and 2 settings, and if you go down the road 2 or 3 months, you feel like you really understand the Bollinger Bands, and it's just driving you nuts that you don't have another setting to play with, shoot me an email. I'll send you some more settings, and I'll give you some more More data to comb through. How's that work for you? All right. Let me think through this. Do I want to take Bollinger Band questions now? Let me give you a couple minutes. Ask me any Bollinger Band questions, and then I'm going to continue with the average directional index. Any Bollinger questions? LM says, this is the best indicator class to date. Wow, I'm learning so much. Thank you, LM. Appreciate that. Thank you, Michael. I appreciate that. Several of you are saying that you understand the Bollingers a lot better than the Legacy Foundation, so I appreciate that. Hopefully this was more insightful for you. I'm trying to make everything as simple as possible. Tom says, why would a guy not search the whole world over for Bollingers and trade those alone? Well, Tom, honestly, Tom, I just put it to you flat out. The reversal trade and the trend trade, pretty much I've already given you tools to identify those outside of Bollingers. So the only really different thing that it adds is the squeeze. And if you're like me, like for me personally, I get the trend trade, I get the reversal trade, but I always forget them because I'm so used to doing line analysis and moving averages and everything else. I forget, honestly, to look at the trend trade and the reversal. They just don't come to mind. So, for me, I'm so indoctrinated with the other stuff that is a little bit more traditional, classical oriented. And by classical, I mean classical technical analysis. But Tom, honestly, I know a lot of people that they would trade just on the Bollingers. So, if you connect, either you connect with it or you don't. It's just kind of that way. That's the way Bollingers are. You either get it or you don't. All right. Great. A lot of you saying you understand it better. That's wonderful. Kevin says, my moving average is 7F. Is this setting okay? No. Not for your Bollingers. I'm not sure what you're looking at, but the answer is no. You want your Bollinger moving average to be 20. And by the way, I've already got those set up for you in your templates. You guys have downloaded your templates, right? If you've downloaded your templates, they're already set up for you. Okay. I'm just skimming through a couple more of these questions here. A lot of these I'm going to let my moderators answers. Can I talk about how I would set my stops? Stacy, not a whole lot changes on setting the stops, honestly. I think a lot of times, and I'm going to give you guys credit, this is it's an innocent question that you guys keep asking, how do you set your stops? But there's just not a lot of rocket science to it. The way you set your stop is when the trend is going up, you just keep moving your stop up. And I usually use a 10-period moving average. And I'll take that 10 period and I'll usually set it just a little bit below that. So as soon as I cross over it, I get out of the trade. And since I tend to trade options mostly, I don't want to hold through a big retracement. If I've been in a trade for 2 or 3 weeks, I'm about to start losing option time premium. And so I'll go ahead and get out of the trade. Or in a case like this, what I might do, this is very common for me to do. In fact, I just did it a couple days ago. I just rolled a couple positions out of a trend. They were in a little consolidation like this, and I had a really good profit on the trade. So what I did is, rather than sit there and hold my profit through the trade and risk the trade going down, I sold my contracts and I bought more contracts that were at the money up here. And that's another way you can do it, especially when you're trading options. A lot of ways you can kind of lower your risk acceptance, if you will. So Stacy, that's really all there is to it. I mean, for setting my stops, I just keep trailing them right up along with the stock itself. And bring any clarification? I'm not sure why I have a hard time relaying how we set stops, but I do understand it. I do understand that you guys you're learning, and it's the most obvious question. How do I set the stop? All right, let's continue. Let me share with you average directional index. The average directional index, also known as ADX. Average directional index, it's kind of an oscillator, but it's an index. It's plotted like it's an oscillator, but it's an index, and it's an index of another indicator that Wells Wilder created. I used to teach it. I'm not going to teach all that tonight. I'm just going to give you kind of the nuts and bolts. ADX is created by Wells Wilder. You might recognize his name because he also created the RSI indicator, which we learned about in the last class. And what the ADX does is it measures what I refer to as the strength of the trend. In other words, it shows if this trend has strength, or if the ADX is going the other direction on it, then it's like, hey, the stock may be going up, but ADX is going the opposite way, and it says that this trade doesn't necessarily have good strength behind it. Again, as I just mentioned, it is created as an average of the directional movement index or indicator. Now, what does that mean? Well, the DMI indicator, the directional movement indicator, it's actually two indicators. We have the DMI plus and minus. Wilder created these to measure the strength of whether we're in a bullish trend or the strength of in a bearish trend. That all merged together to become the ADX. So let's just go straight to the nuts of it, because what I don't want to do is, in the legacy class, I taught you guys the DMI plus and minus, and then you guys got confused, and you're like, well, how do you use DMI plus and minus? I don't use them because they come into ADX. I just taught you DMI plus and minus so you understood ADX better, but I think I confused you. So I'm going to cut that out and just go straight to it. Here's what the ADX is. It is not a momentum indicator specifically, but it plots out like a momentum indicator. What it's going to do is the indicator is going to move up with a strong trend. Either way, whether it's a bullish trend or a bearish trend, the indicator is going to move higher. So you can see right here, just in this picture, as the trade went higher, the indicator went higher, but watch what happened. Just a little bit of weakness right here, and that indicator said, oh. And then, of course, same thing happened right over here. Just a little bit of weakness, and the indicator's like, I don't know about that. You see what's happening there? So here's what happens. The line moves down with a weak trend or a sideways move. Now, again, this doesn't reveal typical overbought, oversold levels because it's not a typical momentum indicator. Uh-oh. Let me push the right key commands here. There we go. Let me show you this picture here. This is on Chipotle Mexican Grill. CMG, several of you watched this trade as the stock went from 300 all the way up to 425. Watch what happens here. Notice in this portion of the move, ADX is actually heading higher. Why? Because there was strength to that bearish move. But as soon as it started to slow down, which just so happened to be right around some support areas in here, just as it started to slow down, ADX said, no, that's not so strong. And what happens is ADX is like, I don't know if I want to get into this or not, showing you more of a sideways move here. After this last dip, and we started to kick it off, ADX is like, yeah, maybe. After this one, we had a big correction, and then that's where the trend really got the green light from ADX. And you can see it was also where the movement of the stock had actually broken out of some serious resistance levels, and that's why we were able to get into such a big trend here. Notice that in this particular case, ADX corrected very quickly with a couple of just a couple of little downswings there. But watch this one. This is really the big picture, or the big story. A lot of people, when a stock has gone from, say, 325 to 400, a lot of people are thinking, hey, this is awesome. This is my retirement pattern. I'm going to take this sucker all the way to Jamaica. And they jump in up here at $420 a share, and the stock does this. And they're like, how could I have known? Or worse, the stock does this. Well, if you look at your ADX, watch what was happening here. We were actually getting a little bit of a bearish divergence. You see that? Lower peaks, even though the stock's going higher. And when the stock starts going sideways, ADX is like, nah. You don't want to chase this one. And so ADX becomes a nice little confirmation tool. And that's really all it is. It's a confirmation tool of a trend. Sometimes our overbought, oversold momentum indicators, sometimes they don't help us in a trend, and ADX does. Is it the most important indicator? Probably not, but it's a pretty cool one. I like it, and I use it. Notice what happened here. Netflix was topping up here. We did get an island reversal pattern, so those of you who know your technical analysis would have already recognized that. But if you didn't know your technical analysis, you may not have. After that gap, look at this. ADX starts turning up, supporting that bearish trend. During the bullish rallies, ADX flatlined or went down. During this bullish rally, ADX went down. During the bearish rallies, what happens? Or bearish sell-offs, ADX comes up, showing the support, showing the strength of that move. And then as we started to get down here into the bottom, we're not really going higher. We're actually still going lower, but ADX is saying, no, 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 no. This thing's got a lot of weakness to it. We did get one last burst of bearishness here that ADX supported, and then the whole thing kind of fell apart there. So what ADX does essentially is it measures the strength of the trend, and that's really it. Now what happens is ADX gets overextended. This is really one of the only overbought type of a signal we can get. There's two ways we read this. On the bottom, when we get a reading of around 20, that's usually the bottom. Most of the time, ADX stays at or above 20. Very rarely do you get much readings lower. Sometimes you get an 18, occasionally a 16, but 20 is kind of the baseline. So that would become our, honestly, oversold is not the right word, but if you're reading it like an oscillator, it would be oversold. It's not the right word, though. What it means when you're down around 20 is it means that there's no trend and we're ready for a new trend to emerge. So understand how we read this indicator. When we're down near 20, there is no trend and it's time for a new trend to emerge, or we're ready for it to emerge. Doesn't tell us the direction. It just tells us that we need a trend. It's more of kind of a momentum thing there. ADX highs, however, are very relative. It's very hard to actually ascertain where the high is on your ADX because it is bound. You can only go up to 100. But we never get up there, and different stocks turn at different places. So what we do for the highs is we actually measure it on a case-by-case basis, and I'm going to show you how to do that in about 10 seconds here. 45 to 50 starts the high range. Generally speaking, about 80% of the ADX range stays between 20 and 45 or 50. So there's only about a little range in there that we tend to move. But when we get above it, we're getting overextended, and obviously those become things you want to look at. Take a look at this Netflix trade. Look at the whole big move here. The trend itself doesn't matter for what I'm going to show you. What I want to show you are these valleys in the ADX. And notice, you see that dotted line? I've got that in my chart constantly. Every time you pull up ADX, it's going to be in there. That's the 20 line. And what that shows is it shows where there's no trend. Okay? When we get down here, especially if it's very, very low, let's just look and see what, oh yeah, there was really no trend here. So when you get into a time period like this, you know that the likelihood of a new trend coming, whether bullish or bearish, is getting very, very high. Okay? When we get down into moments like this where the ADX is very low, in this case is right on that 20, you look up here straight above it and you're like, oh my gosh, we've been going flat. We got a little rectangle kind of pattern right there. This thing needs to bust out. We need to get a good move here. And that's what you're looking for. If you've got a new trend that's breaking out and it's very high, there's a good chance that trend is going to run out of steam very soon. If you've got a new trend that's breaking out and ADX was very low, there's a good chance that trend might have some room to run. So how do we measure the high readings? Well, there's a couple ways. Number one, we can start with 50. If we start with 50, you're going to notice, though, that there is a lot of extension above it. Yes, it gets the majority, but there's a lot of extensions above it here. So what we do is on a case-by-case basis, stock by stock, if you're concerned about the reading for the ADX, just kind of put a flat line across there and say, where does the line capture the majority? And in this particular case, I put the line in here where it caught almost all. I have one that poked out here. It caught that one, and one just barely poked out here. Well, that puts us up here about 60, probably about 64. I don't have an exact number on here, but it's about 64, 65. So in the future, when you're trading Netflix, you can say, well, if ADX is up there in the 64, 65 range, gosh, there's a good chance that this trend is not very sustainable. And sure enough, watch what happens when we're in these extreme readings. Oh, we slowed down. We had a major sideways move for an entire month. Extreme reading right here. What happened? Oh, we actually reversed. Okay, extreme reading right here. What happened? Oh, we actually traded down for a little bit and had a little flag pattern, but it was about a month's worth of trading. What happened with this extreme reading? Oh yeah, we actually gapped out of here, and then we actually traded sideways for a little bit until all of the bullishness could shake out, and we would actually have have momentum to actually continue higher again. So that's the reason you look for the extreme levels in ADX. You look for the extremes because when you see an extreme in ADX, there's a good chance that that trend needs to rest. Doesn't matter if it's bullish or bearish. It's just that that trend needs to rest. Conversely, if you're very, very low, that stock needs to have a new trend. Does that make sense? Okay. Now, let's look at one for First Solar. I'll show you the same pattern here. Again, looking at the 20, most of the time we're right on or just barely below the 20 reading there on the ADX, showing that that tends to be kind of where the trend is done, or where not where the trend is done, but where a new trend is ready to shape up. Now let's look here and let's see what happens when we put a line at 50. Well, that captures a good majority of this First Solar trade, but the extremes, we've got 3 peaks up here that hit almost at 70. And so, you got 1 there, 2 here, 3 here, and then you've got 1, 2, 3, 4, and of course this is over the last several years. So you've got 4 years on here, and in the last 4 years we've had 4 peaks above 50, 7 peaks above 50, 3 of which were all the way up to 70. So what does that tell you? Well, it tells you that if you're above 50, there's a good chance that this trade has gone a long ways and it needs to have a rest. And if you're above 70 or up near 70, there's a really good chance that this trade needs to have a little bit of a break. Does that make sense to you guys? You guys tracking with me here? Let's look at one more. Let's look at this one for Apple, because I know a lot of you guys trade Apple. Again, the 20 line really holds strong all the way through here. Watch what happens when I put one in here. This is a little bit higher. This is around 60. Okay, so 60 contains the majority of the price action for the ADX on Apple, which means it's got a little bit more momentum in its trends. Okay, you see that? But it doesn't contain all of it. Let's look at the one on top here. That puts us all the way up here, about 70 plus, probably 75 maybe. And you can see that we've actually got 1, 2, 3, 4 solid touches way up there. We've got several, 1, 2, 3, 4, 5, several other additional places where it came somewhere in the middle there. So again, when we get to those really extreme readings here, what's about to happen? Well, nothing happened at this particular point. I mean, that just had a very fast reverse or a fast 1 day down. But the interesting thing about it is that the trend was running up in an unsustainable trend. The momentum, in this case, the ADX momentum, was running down. You knew there was going to be a reversal of some sort very quickly, and it just whiplashed right down there. A lot of you got caught in that whiplash on Apple. Very, very big move. And so anytime you have an overextended reading on ADX, does it mean get out of the trade? No. It means tighten your stops and be aware that you're overextended. And that's really about the extent of the meaning. Okay? Hopefully this brings some awareness to you. Now, the settings that I use for ADX, I use a setting of 7. And to be completely honest, I sometimes play with 9. And then I go back to 7, and then I play with 9 for a little while, then I go back to 7. Wells Wilder suggested 14. Again, he was really into the fact that it was half of a lunar cycle, and I just don't get into the lunar cycle that much. But if you like 14, by golly, use the 14 setting. I think all 3 of them are going to give you fairly similar settings. 14 I find to be a little bit late, and it annoys me because it's a little bit behind. I think it probably worked okay in 1978 when Wells Wilder was doing this stuff. But I think for 2012, I like a faster setting, 7 or 9, either one of those. I won't call you crazy. But when you see me using it in Power Trader, it's going to be a setting of 7. All right, let me wrap some stuff up here, and then I'll take your questions at the end. Up until now, over the last month, we have learned a bunch of great technical analysis, and hopefully you've got a good grasp of what I've taught you. Hopefully you've been doing your homework and you've been putting the stuff into action. You've learned a very, very solid foundation of technical analysis. Have you learned everything about technical analysis? By golly, no. There's no way you can learn everything. I mean, I don't know everything, and I've read a bajillion books on it. The people that know everything don't know everything. So don't ever think that you can know everything on the subject. You can't. But what you can have is a solid foundation that will give you the nuts and bolts of what you need to learn how to trade with technical analysis. We use this technical analysis to form a solid forecast for the future prices of the stock movement. And these basics that you've learned will apply to any financial market in any environment. So You might have to tweak some of the indicators. Like, let's say you take this information and you use it in the futures market. You're going to have to tweak some of the indicators possibly, but all the basics are there. In fact, all the hardcore technical analysis books, and when I say the hardcore ones, I'm talking about the ones that are, 1,000 pages and make your eyes bleed because they're super, super boring. Those books are all written for stocks, futures, forex, the entire thing. It's cross-platform. You go over to Europe and you trade European market, the technical analysis is going to work the same. You're trading in Japan, the technical analysis is going to work the same. So what I've given you here is I've given you a solid base for any type of a market. Obviously, you're going to have to apply it to your markets. I've given it to you in a stock format. The settings I've given you for your indicators work well for stocks. But everything is going to apply the same, okay? So that's what I want you to know about it. You've learned 5 steps to confirmation. These are the steps that we use. These steps give us what I call the 5 key areas that give us the greatest likelihood of having a profitable trade or having a positive trade. Those 5 steps: line analysis, that's your support and resistance. Those are your chart patterns. We've looked at your candlesticks. You've learned that here in the last couple of weeks. You've learned about your moving averages and your indicators. And I lumped these two together because technically we could call it 4 steps to confirmation. But because I taught moving averages very early on, and because I use it a lot of time, well, mostly just with the trend, I actually keep putting it separate. But technically, if your mind would work better with 4 steps to confirmation, you can lump those two together. You will not offend me one bit. All right. Now, here's the good news. I got some action steps for you, and we're going to be getting into level 3. It's coming up very soon here. Here's your action steps for tonight and for the next week. Set up all your indicators in your charting software. If you're using Trade Navigator, they are set up for you. Just simply pull up those templates that we've set up for you. Observe several charts and watch how these indicators behave and react. And when I say several charts, at this point, especially since we've got a 1-week break, I would love to see you go through 15, 20, 30 charts and just make some notes. They don't have to be, hey, I traded this stock. It's just some observations. Just go look at the stuff. And, people say, well, I don't know what I'm looking at. You're not going to know unless you go look at it. It's kind of like buying real estate. What house do you want? I don't know. Well, have you looked? No? Well, how do you know what house you're going to want if you never go look? You're never going to really get comfortable with these things, these analysis tools, if you don't go do them. And the number one reason people don't go do them, either they say, I don't have time, or they say, more often, I don't know what I'm looking at. I don't know what to look for. Don't be so picky. Just go look. Just start looking. And as you start looking, you're going to start recognizing stuff. Get on the social network. Do the quizzes. The quizzes are really going to help you out. Social network where you can get in there and talk in the groups and the forums and whatnot. Talk with your fellow students. Guys, you got some really smart students. I mean, you really got some fellow co-students that are very, very bright. They know what they're talking about. They will help you work through a lot of these issues and help clarify stuff. And of course, well, I think you can post a chart in the group, I think. There was a problem a couple weeks ago. I think they've got that resolved. If not, it's coming very soon, where you can just post your charts right up there in the group and people can address them and talk together about it. I do want you setting up trades in your virtual account. You have zero excuse to not be setting up trades. Now, I'm not saying place real money trades. In fact, I'm never going to tell you to place real money trades. That's going to be up to you. But I will tell you from day one, you should be doing virtual trades and just experiencing the action of placing the trades. What I would suggest to you is over the next week, try to review your notes for all of the level 2 material, solidify your technical analysis understanding, and we are going to have a break this week. What happens is, for those of you who are new and you've not been through a break, basically about every month we take a 1-week break. It just so happened last month we did not take one, but that was because we were trying to line it out so that we could make the Thanksgiving breaks all work out. And we end up with a 2-week break coming up in October, and sometimes they end up a little clunky, but that's what happens. Anyway, so this week is a natural 1-week break. And when we come back, we're going to get into level 3. Guys, girls, this is where the rubber meets the road. In level 3, we're going to start class number 1, trader conditioning. Level 3 is all about psychology, strategies, and conditioning. And that's it. And what we're going to be doing for the next 8 classes together, the next 2 classes specifically, We're doing conditioning, conditioning, conditioning. I'm going to beat it into you, and I am going to be really upset if you don't at least understand the concept of the conditioning process when I'm done with you. Then it's going to be up to you to take action, but we're going to do it really hardcore and make sure that you really understand the process. Because I think it was Randy earlier tonight, he said that the moving average system didn't work for him. Well, Randy, if you do it enough, you're going to see that it does work. The conditioning process is going to help you with that. So that's coming up. Very excited about where that stuff is going. Let's see. Other things to discuss with you. Once we're done with conditioning, we'll get into the options. We'll start talking about more in-depth option stuff, and then we'll kind of wrap everything up. So that's where we're going once we're done. Level 3 coming up. Questions, comments, opposing views as we round it out here. Alejandro says, I've been making a couple $1,000s lately, a couple grands, he says. Good for you, Alejandro. Frank, good question. He says, can we draw meaningful trend lines on ADX as we learned in the oscillators? I would suggest no. You can try it, Frank. I don't think it's going to give you the kind of insight that you would like. Nah, I don't think you're going to find that super fun. What is conditioning, says Gene. Gene, you come back a week from Monday, and I'm going to blow your mind when I teach you about trader conditioning. What trader conditioning does is it's the process of conditioning your mind for automated response. It's just going to absolutely... It's honestly, guys, I can teach anybody the techniques of trading. I can teach anybody the technical analysis. I would dare say millions of people know this information. It's not really that secretive, the stuff that I teach you. Implementing it is the challenge. And you just have to do it. And the way that you do it is either you put real money on the line and you lose a lot of money. And I'm raising my hand because that was my immediate course of action. Then when I lost all my money, I said, this isn't working. I started doing the virtual trading and I realized that, hey, this is a lot cheaper. I can learn a lot of stuff with virtual trading. And then once you've gotten through that, then you can move back to real money. And then the other step that we're adding to it is how do you accelerate that process? And Gene, think about it like being in a simulator. But instead of being in like a flight simulator, you're in a stock trading simulator. And that's the idea behind it. And I'm going to teach you all that stuff coming up. It's exciting. I really, it's probably the best stuff we got. It really is great stuff. Tom, will there be an entry application? Huh? Tom, you're already in the classes. You don't have to apply. I'm not sure I understand your question, my friend. DG says, my software groups DMI plus and minus with ADX. What do you think of this? Well, you can use the two. You can use all three if you want. DMI plus and minus are actually... That is the foundation of ADX. In order for ADX to be formed, it has to have a DMI plus and minus calculation. So, what do I think of it? Well, if you want to see the extra lines, no problem, but I just take them off because it becomes muddled for me. Right here, let's see. George says, are we automatically registered for level 3? Oh, good question, George. I don't think so, but you might be. They've put so many new technologies in play. I don't know what all is doing what at this point. But the easy thing to do is if you are not registered for level 3, just go onto the website and go into your level 3 Foundations of Stocks and Options and click on the button that says register for this class. In fact, I will show you all how to do that right now. It's so simple. I really am convinced that a caveman could do it. That's how simple I believe it is. Cool new iPad app available from Trade Navigator for options trading, by the way, if you guys didn't see the announcement, while I pull up TradeSmartU.com. All right, whenever you pull up your website here, or our website, I should say, and you log in with your personal email, not with my email, and you put your personal password in here, not my password. I'm trying to remember the right password here. All right. Whenever you log in and you land on your members homepage, come right up here, George, to Foundations Level 3. Click it. And when you click it, you will have a place that is missing. Why is it missing? They may not have turned it on yet. Let me see if Level 2 is in there, because I bet what's happened is they're going to wait till tonight's class is over because they didn't want people registered for it yet. Click here to register. You will have a little thing in the level 3 that says click here to register. You see that? And you click it and it will register you. It will be probably tomorrow right here under the level 3. So it will say click here to register. Okay? And I'm so worried that it's not going to be there that I'm going to go send the guy an email right now who's responsible for that. Hey, by the way, if you're not my friend on the social network, would you please be my friend? I will not turn you down. I have a friend request right now. But I gotta catch up with Gordon. I mean, Gordon Gecko is just killing me here. Look at that. I mean, he's got 637 friends. I only have 497. I will not reject a friend. All you have to do is ask. Now, I have tried to invite you, but what I did is I couldn't go through all the members. There was just like 9,000 of them. So I couldn't go through all of them. I went through everybody who had a picture, and I invited you guys. So if you didn't have a picture, you didn't get a personal invite. And a lot of you are already my friends. Obviously, I got 500 of you, but I'm convinced some of you are not my friend. So please, please, please invite me to be your friend, and I will be. Also, I noticed I got some text down here. George says, can't wait for class tonight. Listen, I'm pretty much logged on 24 hours a day. So if you send me a little private chat and I don't respond, please don't take it personal. Most of the time I come in and I've got all these messages and I wasn't online to see them. So it said I was online, but I really wasn't because I stay logged in pretty much all the time. So please don't be offended if I don't respond to your private chat. Do feel free, though, to be my friend and to send me a message. Click on messages and no, not see. How do you send me a message? I think maybe it is under messages. I don't remember how you send a message. I guess I have to go to somebody that it's not me. That's the problem. Is I'm on my own profile. Let's go to Preston here. And see, Preston is my friend. And if I want to send Preston a message, I will just click on send message. Preston, are you in my class tonight? I don't even know if Preston's here. Let's see. Where did Preston come from? Let me see if he's here. Well, I'm not going to send him a random message because he'll be like, why are you sending me? Oh, yes, he is here. Okay. Okay, so Preston is going to get an email from me or message from me right now. Hey, man, what up? And then you guys are going to watch how simple this is. Preston, so glad that you can participate in our classes. Now, see, watch. I misspelled it. Oh, it didn't fix it. I thought it was going to fix it. Usually, well, maybe it's just on the Mac side. But on the Mac side, it will fix your spelling, I think. And then I'm going to tell Preston that you are a great addition. And he's going to feel special even though he's in class. And so he knows what I just sent him. All right. So be my friend. Oh, I've already got 2 friend requests. Watch, I'm going to do it right in front of all of you. Brent and Ronald, you are now my friends as well. Thank you. And I'll be any of y'all's friends. And feel free to send me messages. Sometimes it takes a little bit to respond because I can't always get to them within a short period, but I do try to respond, especially if there's a question. If it's just a statement of, hey, thanks, I don't often respond to some of those because I get a lot of them. But I do try to respond to serious questions as much as we can. All right, so you guys have an awesome night. Have an awesome break. Have an awesome weekend. I hope tonight really clarified a lot of great stuff regarding indicators. Hope the last 2 classes. Actually, more specifically, I hope the last 8 classes have been a really good clarification of technical analysis for you guys. I would really, really very much welcome your response. Feel free to send me a message on the network here. Probably the easiest way, just shoot me a message there. And if you guys have good feedback, I'll certainly consider it. And if we can make things better, then we want to make it better. We want to try to make it as clear as possible and as consistent as possible. So hopefully this is all helping you guys out greatly. All right. Thank you. Paula says it was a great, fantastic upgrade from tsufsol2. Appreciate that. Let's see here. Okay, let's see. All right, appreciate that. Appreciate that. Well, you guys have an awesome Labor Day weekend as well, and good night to all of you.